Hi, this video is about liabilities, which is a part of 5 types of account. The liability is a present legal obligation of the entity to transfer an economic resource as a result of past event. It's a claim of outsiders on total assets of the company. Liabilities also arise from borrowings, which may be made to improve business and paid back over an agreed period. Its original place in account is credit, so when there is an increase in a liability, the liability will be credited, and when there is a decrease in liability, the liability is debited. Let's see the classification of the liabilities. There are 3 classifications of liabilities. Number 1, current liabilities or short-term liabilities. Number 2, long-term liabilities. Number 3, contingent liabilities. What are current liabilities? Those liabilities which are normally due and payable within 1 year are grouped as current liabilities. These are also called short-term liabilities. Examples are creditors, salaries and wages payable, gratuity and bonus payable, interest payable, bills payable, sundry creditors, bank overdraft, sales tax payable, income tax payable, etc. Now let's go through the current liabilities example with their original place in account. Creditors or accounts payable, the original place in account is credit. Salaries and wages payable, credit. Tax payable, credit. All sundry payables, credit. Now let's move to the other kind of liability, which is a long-term liability. Long-term liabilities are those liabilities which are not immediately due but become due after a year or more. Example, bank loans, debentures, interest payable on maturity. Now let's see the examples again for the long-term liabilities with their original places in accounts. Same way, the long-term bank loans, original place is credit. Debenture, the original place is credit. Lease payments, the original place is credit. Interest on maturity, the original place is credit. What are contingent liabilities? Now, this is the third classification of the liability. Certain liabilities are payable on the occurrence of some event or contingency. Contingency signifies something which may or may not take place. Examples are default in supply, breach of contracts, etc. These liabilities are not included in the balance sheet but are mentioned separately as a note to the balance sheet. Thank you and see you in another video.